Hello there, this is fairbinaryoptions.com. We are looking at a possible rising wedge on the US dollar and Japanese yen, and therefore would like to buy put options on the pair. I know it's a bit risky in the sense that this currency pair has only moved to the upside, as it is, if you want, pegged to the US dollar, to the US equity markets, in the sense that the ES and the algos are going hand in hand, and it is a strong bullish trend for the US equity markets. Look, even with what happened the other day, on the other day with this move lower after the 120 has been pierced, with this move lower here into 119.33, after the European equity markets closed, basically the ES in the United States has been bought aggressively by algos, and US dollar Japanese yen as a consequence made a new high. However, this doesn't change our, let's say, we are not seeing this as a threat. We are looking at it as being an opportunity, and we are saying that this move that starts from this moment of time is nothing but a first wave that goes all the way to the up. So from this is the end of the third wave, like this. Then of course we have here a flat that is being called an irregular failure, because for the fourth wave, the C wave part of the fourth wave fails to take the previous wave's low, and then we look for a fifth wave, which is, I don't know if it is completed, but anyways, which needs to be a rising wedge. What is this rising wedge? Well, first of all, this would be of a lower degree, wave 1, or the end of the first wave. Then we have the second wave that ends with a complex correction wave here, and the second wave always is being the most time consuming. The second wave. Then we need to have the third wave to the upside. I would say this is the third wave here. 1, 2, 3. Like this. Then the fourth wave, that is a contracting triangle, A, B, C, D, E. So the fourth wave actually ended with this move lower from the other day. And then the fifth wave should be anywhere around this moment of time. Usually the fifth wave relates in an impulsive move with this kind of structure, relates with 38.2 out of the third wave. So if you measure the length of the third wave from here to here, oops, not this one. So if you measure the move from here to here, and then if we go and take 38.2, and this is the 38.2 from here to here, and we put it by the moment that the triangle ends, then we have an educated guess about the length of the fifth wave, and that would be only appropriate to go and buy put options on the pair based on the fact that the fifth wave might be done. How is the wedge looking? Well, this is the wedge from the end of the first wave till the end of the third wave, and from the end of the second wave till the end of the fourth wave, like this. And now we should do what? Well, normally we should wait for the 2 to 4 trend line to be broken. But before, because the 38.2 there is pierced, it is reached very nicely, I would say it is worth taking a chance with end of day expiration date 1 put options plus an option with 1 week expiration date. So if you want to divide the investment into 2 different plans, into 2 different options, would be alright, that too. So buying put options with end of day and 1 week expiration date for the US dollar and Japanese yen on the prerogatives of a rising wedge. Thank you very much for being here. It's fairbinaryoptions.com. Let's see what these markets will do today. Bye bye.